John, the next question maybe to think about is, I feel like I'm a positive guy, half glass full kind of guy. Um, if we were to use market terms, I'm more of a bull than a bear. And despite the market declines and the challenges that we've had, what opportunities or positives do you see coming out of this crisis?
Yeah, Scott, it's a good question. And I think there's reasons. It's always good to be optimistic. I think there's reasons why it's appropriate here too. First of all, when you look at the stock declines we saw in February and March, our bond portfolios, if you held in high quality bonds, they perform much better, flat to slightly positive during that time frame. And so we always talk when we have a portfolio of stocks and bonds, it's like a car, right? Stocks are our gas and bonds are our brake. And bonds serve their purpose as being that reducing that volatility of our portfolio, as serving serving the purpose of being the brakes for our portfolio during that time. And we know that the better those brakes are, the less our portfolio falls, which helps us stay in the market, stay invested. Those bond yields also, with the bond performance doing well, has also caused interest rates to fall. And those lower interest rates will actually serve as a catalyst for our economy on the recovery side. Because when you think about people, whether it's buying a house, buying a new car, home equity line, doing improvements, a lot of businesses deciding to expand their business, the lower interest rates are, the more it incentivizes businesses and consumers to spend. And so the fact that we've seen interest rates go so low should help be a catalyst for our economy to help speed up the recovery once we get on the other side of this. We talked about low interest rates. I don't like to use superlatives, Scott, when it comes to investing, because usually it comes back to bite you. But with 10-year Treasury below 1%, now may be the best time of the decade to refinance. If you look at how low interest rates are right now, whether it be a mortgage, a home equity line, a business loan, a student loan, or God forbid, credit card debt, rates are so low. Last year in 2019, rates weren't high by any means, but the 30-year fixed mortgage by Freddie Mac has fallen by more than 1% since January of 19. Wow. We bought a house in October of 19. In late February, I gave a call to our mortgage broker and said, "Hey, rates have fallen. When can I refinance?" And in fact, they said that they were refinanced without actually doing a technical refinance as a service to a new client, and we dropped our mortgage by $1,000. Wow. A year, I should say.
Yeah.
And there's very few guarantees in investments.
Yeah.
But if you can drop the rate of your interest payments, you are guaranteeing a reduced cost of that mortgage or of whatever that loan is for the life of the loan, right? And so as I was telling people, we've come back up, but my portfolio is down a lot more than that $1,000 we saved. The difference was I believe that my investment portfolio would recover over the long term. And those interest savings are going to be in my mind to keep. That $1,000 is not going to. I'm not going to be giving that up in the future, right? And so, I think that refinanced aspect is really valuable. And all it costs you is a call, right? Pick up the phone and call and say, does it make sense for me to refinance? It could save you a lot of money during these times. One other thing about silver linings, people might be asking, is now a good time to invest? Is this the bottom, right? And unfortunately, we already talked about it. I left my crystal ball in the office. But I think what's important is you ask the right questions. Scott, you nor me, nor anyone else really knows where the market bottom is or if we'll fall from here and how far.
Yeah.
Right. But I think the question you should be asking yourself is not, is this the bottom? Because perfection is the enemy of the good. The question you should be asking yourself is, am I going to be happy about do I think the chances are likely that I'll be happy putting money to work today in 5 or 10 years? Right? And if the answer to that is yes, then now is a good time to put money to work. If you look at let me get the date right. October 9th of 2007 was the day the market peaked before the Great Recession, before it fell by 55% over the next 18 months. Yeah. If you had invested in the S&P 500 on October 9th, 2007 and held for 12 years through last week, your average annualized return would have been 7+% per year.
Wow. That's great.
And that's investing on the worst day before the largest recession we've seen since the Great Depression.
Yeah.
And so I think it's really important for investors to realize that if you have a long-term time frame, we don't need to be too cute about, is this the right time to buy, right? And if you're worried about if the markets are going to go lower, it's a great reason to say, let's do a dollar cost average, right? Let's put a little money to work the third Friday of this month, next month, and the following month, right?
Yeah.
Create a systematic plan so that you do it over time that's not geared to your emotions.
Yeah.
The final thing in terms of opportunity, Scott, I'll mention, and this may come up again, is Roth IRA conversions. And this is certainly something that you can speak to much better than I can, right? Is when stock market declines, the ability to take a pre-tax money and convert it to after-tax money, there's a tax bill associated with that. Well,
right.
When stocks are down, that tax bill is lower. And so it's something else to keep in your back pocket, whether it's a small part of your pre-tax money, but something else that you might be interested in taking advantage of if the market declines, especially for those investors who might be concerned about higher tax rates in the future with all this government spending.
Yeah. Yeah, a couple of points there, John, to make too. One on the refinancing. I've got lots of clients that are pharmacists, and they come out of St. Louis College of Pharmacy or SIU School of Pharmacy or wherever with all these student loans. And so we've had conversations with many of them about, hey, maybe take a look. Does it make sense for you to refinance some of that student loan debt right now? They come out with $100,000, $200,000, $250,000 of student loan debt from, St. Louis College of Pharmacy. Maybe it makes sense to refinance some of that. Maybe it doesn't, but that's something to look at while rates are really low right now. And as far as Roth IRA conversions, we've probably done at least 25 of these in the last 10 weeks. People have money sitting in IRAs. We reach out to them, say, hey, markets are low right now. It makes a lot of sense to go ahead and do this. And many of them have, I'd say most of them have done that. And taking the opportunity while the markets are lower to do that. And, I get the question sometimes, well, aren't I above the income limits on Roth IRA? So we have that discussion. Well, we're doing a backdoor Roth IRA, which is a way to do it. And we have that discussion on how we can do it still. And so I think it's, two great points there. Roth IRA conversions. It's in even today as we sit here, even with the market up, whatever it was yesterday, the Dow 800 or 900 points, it still makes sense today to do Roth IRA conversions to get that money in the post-tax, the after-tax world. So, and if you have a home or you have student loans or something like that you have a little higher interest rate, maybe take a look. Does it make sense to go ahead and refinance? So, I think those are great points to look at. Anything else to add there, John?
No, only, Scott, that you talked about when you have a couple $100,000 of a loan, whether it be a house or pharmacy school, it doesn't take much of a drop in interest rates to make it worth your while to look at refinancing.
Yeah, absolutely.